Now, cross-border payments. Now, it's a topic that's close to so many of us, be it somebody sending money back home to friends or family, be it a small business that's sending money or a large corporate that's moving across to pay a business invoice. So it does touch the life of everyone in this room in some form or the other, whether we like it or not. But unfortunately, sometimes it just takes a back seat, whether it's a financial institution, a large bank, it just happens to be something that we take for granted. And something that's also seen a lot of innovation, don't get me wrong, it's come a long way, but at the same time, we all know there's miles to go before we sleep on that subject. So which is why we just thought we'll have this session with a host of people here on this panel from different parts of the payments ecosystem to sort of add value or add color to what's happening in this space right now. Let's start with you, Rochelle. Why don't you tell us a little bit about yourself, and then we'll just do a round of intro before I get into questions.
Sure, Rochelle Hilliard. So I head up our financial institutions sales team within our global transaction banking vertical at Scotiabank. We provide a whole host of transaction banking solutions to our financial institutions clients, from large banks through to fintechs, payment service providers, MSBs, and then sort of everything that I would say in between, which is asset managers, insurance companies, and that's across our footprint.
Awesome.
Lovely to be here. Thank you.
That's a question. Steph?
Hi everyone, Steph Chu. I'm a partner at Portage. We're a fintech-focused venture platform. So I specifically invest in our early stage fintechs, so series A and B. We also have a late stage team, so we can really fund companies through their life cycle at this point. We invest globally. I would say we've done a lot in the payment space, a lot in cross-border payments specifically. I am going to bring up stablecoins to the chagrin of a few people here, I think, but that's the 2 minutes on us.
That's great. Hamed, over to you.
Hamed Arbabi, I'm the CEO and founder of VoPay. VoPay is a fintech as a service platform, and we essentially work with vertical software applications and help them build embedded treasury and payment orchestration. We work across various verticals, from lending, property management, healthcare, insurance, and we help the finance operation of these organizations to streamline their money movement from how they initiate the transaction and track and reconcile into their systems.
Phenomenal. All right. So just getting on with the subject of cross-border payments. Now, as I said, this has been going on for the last 50 years. Money has been moving borders since several centuries, and it's only got more efficient over time. So clearly, there are certain, while we get into the problems at some point during this conversation, there are things that are obviously working, and things have been improving over the last couple of years. So maybe just a few viewpoints from all of you in terms of what do you think is actually working and obviously has seen some improvement over time. Maybe Rochelle, I start with you again from a bank's perspective.
Sure, from a bank's perspective, and it's been mentioned on several of the panels before this, we come from a place of we're lucky that we're starting off with trust. We've got a large amount of trust, strong regulation, very strong regulation, that enables us to open the access to the cross borders for our clients. But really, what's working well, has been working well, is through integration with innovation with other fintechs, and also vertical integration internally, and also including innovation, so ensuring that we're making it easier for our clients to access us, really keeping the mess behind the scenes and trying to simplify that client journey. There's still a ways to go, but we've managed to create advances through embedded APIs and ensuring that we can just simplify things for our clients. And then through the partnerships, we're able to access more corridors, and able to access more flexibility, like straight to wallet and that sort of thing. So I think that's what's working well and what our clients are starting to see. There's more room to grow, and we're excited about what's coming.
Awesome. Steph, from your perspective, from your vantage point, anything that you'd like to add on that? Yeah.
So if I think about the major innovations that have happened in the cross-border space in the last decade that fintechs have played a role in, it's been mainly on the retail side, and it's mainly about convenience. So if you think about TransferWise, its cost is also a big value proposition that I think has been attempted, but I would say most of the cross-border payments innovation has led in Europe. TransferWise, UK-based company. There's also been Revolut's original thesis was always about cross-border payments across Europe, one card, very low cost. I think the next iteration of stuff that we're seeing, or innovation in the cross-border space, it's still early, but is in stablecoins. But what's worked so far is the 1.0, I would say, speed has been the real promise, and cost in some corridors. And so there's been some fintech innovation. I would say there's still a lot more to come. And for most people sending money to most corridors now, unless it's one of the top 5 pairs, you're not going to see a significant cost advantage over incumbents. And so I still think we're in really like phase 0.5 of where we could be in terms of innovation.
Awesome. Well, that's great. A great place to be, because that's why we need people like you and Hamid.
That's great. So we are more focused on the B2B side, which we enable businesses to leverage cross-border rails, either for their own business or their underlying businesses or customers. We look at it from 3 kind of angles. There's security, safety, speed, and inclusiveness of rails. And we know that the less exciting part of cross-border payments are compliance and risk, which if we can cross that point and have ability to address all the compliance risks and fraud risks, then speed is basically irrelevant at that point, because it's just the data moves in real time between banks and treasury systems, and it's just a matter of enabling the settlement. And on the inclusiveness of the rails, we see there are more rails everywhere. On MasterCard, as our network, we have cash pickup, wallets, bank account deposits, push to card, and we know each region has different flavor of how they used to accept funds. And now we see that even businesses that are dispersing funds, either for remote workers or subcontractors, they each have different methods of receiving the funds, and how we can cover more regions and areas by enabling these rails.
That's awesome. Thanks for the plug on MasterCard. I need to meet the guy who runs that at MasterCard. Great. So, I mean, what's the discussion on cross-border payments without actually discussing the pain points that are there? Now, agreed, pain points have been changing over time. As you mentioned, Steph, stable coins just promise to be an answer to certain things. But again, from looking at it from a fintech perspective, obviously from your perspective, from what you see as a fintech early stage investor, and from a bank's perspective. So maybe Hamid, we start with you this time. You've been working with corporates, both as well as platform providers, embedding your services across there. So what are some of the pain points that you're hearing of that continue to persist, or the new ones that are emerging over there?
Yeah. So I think the definition of innovation has changed significantly over the last few years. It started with how we can offer a linear user experience for end users or customers to interact with the interfaces. And now we see as that side of the business is kind of has evolved significantly. It's now more about efficiency and ease of operation for service providers. And when we engage with smaller FIs or organizations that want to roll out cross-border payment for their underlying customers, the biggest challenge that they have is on that middle office operation, how they can manage the rates, how they manage the compliance, and how they have visibility into the business operation without really becoming money movement experts. And we talk about industries in account payable services, account receivable, that they're good at building those softwares to help businesses to manage procurement or collection, but they're not money movement experts. So that's where we see significant opportunity, where how we can help these organizations with providing them plug-in tools that can easily roll into their existing platform and help them offer the cross-border service to their existing customers.
Awesome. Steph, from your perspective, both as an investor, but also as a corporate that moves money as well, some of the pain points that you see there.
I think the biggest pain point right now, I think convenience and cost convenience is still not addressed. The I will not rest until stablecoins destroy the SWIFT network, because quite frankly, the fact that Canadians pay some of the highest fees to send money around the world because of the profit pools of many of our large banks, I think is a major problem for the Canadian consumer. I think that's true around the world. The SWIFT network is still a super antiquated, old school protocol. Does it make sense for that to be the rails that all international money transfer works through today? I would say no. So convenience, speed, still a massive problem. I think stablecoins are one solution to that. There are several other payment modernization frameworks that are domestically oriented in Canada and the US, and I would say the developing world is really leading on that front, but we haven't yet seen a new consortium to help global payments move forward on a new kind of protocol that will enable real speed and real cost efficiency. And I think we will see that stablecoins could be one solution for that. And you can see it in the flows. It's 20 trillion of year-to-date of stablecoin flows on a payments use case alone. That's up, so 30 trillion is kind of the trailing 12 months numbers there. These are real numbers and real flows, and I think it's being led by what I would describe as the global south, 400 million stablecoin wallets around the world being used to move money. There's clearly demand in the payment space for more innovation on a cost and a speed perspective. It's still very big unsolved problems, I think, for both retail consumers and also businesses.
Thank you. And Rachel, obviously, you're with Scotiabank and you're part of SWIFT as well as a member of that. So just want to be cautious about that. I mean, agreed. I mean, SWIFT, and again, don't get me wrong, I think SWIFT has come a long way as well, with GPI Instant and things that are happening on that, SWIFT Go, et cetera. And certain banks in this room, I'm sure, have already done some stuff with SWIFT. But clearly, from your perspective, there has been innovation, there's no doubt about it. I mean, and to your point, stable coins, the blockchain. I mean, people talk about stablecoin as being, that low-calorie dessert that people are yet to try. And so how do you get people to kind of try that at some point? But from Scotia's perspective, what do you think are some of the existing, the persisting pain points that are still there? And obviously we'll get to the solutions, but just your thoughts from your perspective.
Yeah, I think my panelists have said it, speed, transparency, traceability, low cost, all of those things continue to be pain points across the markets. Stablecoin, distributed ledger technology, all of that is going to be, as you said, an option. SWIFT continues to be an option, right? SWIFT is at a position where it's connecting all of the banks right now, right? We can't ignore that. And so how do we leverage that, right? How do we leverage it using stablecoin? How do we use it leveraging distributed ledger technology? And I know SWIFT working hard to try and see those technologies, those innovations to solve for some of these pain points. And so are the banks. So Scotiabank is, earlier on in the panel, I think it was Ellen said, it's about starting with the problem and trying to solve that. And so we're seeing the problem, and we've mentioned the problems, and then using these types of innovation to see how we can solve it. With real-time rail comes the need for 24/7 liquidity solutions and being able to ensure that, Scotiabank, we've got our nostros funded across the world in the markets that we're operating in, and DTL is going to be one of them. Stablecoin might be another. And so we're exploring those use cases to help solve for those problems. And it's about the optionality, right? I think that, we need to be open as a community to trying all of these elements to see how they can be woven together and not throwing the baby out with the bathwater.
Got it, okay. And I think to your point, and I think all of you kind of touched upon this as well, you mentioned the fact that, compliance is not the coolest part of this business, but often, people do, prioritize innovation over compliance. So in a world that, dealing with these divergent needs where you have to invest into the new platform or the new rails and new technologies while at the same time not let go of compliance controls. So Hamid, how do you see, how do you end up prioritizing, the work streams as a fintech, especially in that space?
Yeah. The compliance is one area that has slowed down these services significantly, and it has improved throughout the digital transformation, where there are more tools and resources and databases accessible to kind of have a real-time validation and performance of KYC for both sender and receiver. And I think that's a main area that everyone are trying to enhance on how we can even tokenize these individuals that are shareable across industries, that it's considered a whitelist customer. Everything we do on compliance, we have blacklist, PEP list, OFAC list, but we don't have actually the other side of it. So we see if you have an ecosystem of customers that have been vetted and maintaining that database on the health of the database on a regular basis, that can really help anyone with cross-border services. And at the same time, the mainstream aspect of it is how you provide the tools to organizations who want to offer cross-border services. A unified tool that does everything from KYC, KYB, screening and watch lists, etc. Because all of these tools are so dispersed that you need at least 8 to 12 tools to be able to complete your KYB and meet the compliant expectation. So the consolidation of those tools are also essential.
That makes sense, yeah. And Stephanie, when Portage looks at investments, do you see a lot of these early stage fintechs coming in that are actually focusing on simplifying compliance-related needs, or is it just like another, like you said, you mentioned Wise and TransferWise, is it all end-to-end solution providers, or do you actually see focused entities that are coming into this space as well?
Most of the compliance stacks today basically comply with whatever the local jurisdictions regulations are. And so we haven't seen, I would say, that much innovation on the specific compliance stack, because everybody has to conform with whatever the regulation is for KYC and KYB. Whatever your local regulation is the one that you're going to follow. So I haven't seen that much innovation. I think what's interesting now is the ability for you as a person from Egypt or Colombia or Brazil to get a US dollar account using your local ID. That was something that was not possible before, and shortcuts some of the cross-border flow, because you can now just have a store of US dollars that you get paid, and you can pay your US dollar bills if you're a business, or if you're a consumer, you can pay for a subscription in US dollars directly from a US bank account, which I think does shortcut a lot of what was there before. And to your point, Hamid, it relies on a huge network of different KYB and KYC providers from around the world. So there are now all of these aggregators that you can plug into that allow you to do local KYC with like a local Mexican ID, which is very different than a Brazilian ID, and follow the KYC, KYB regulation of an American bank, which is not easy to do. So that's what I would say on the regulatory and compliance side has been most interesting to date. But otherwise, your limiting factor is whatever your regulator has asserted.
Mm-hmm. Makes sense.
And I would say the fact that we're all trying to follow our local regulation is another big pain point, right? Because the local regulations don't match up. So when we're talking cross-border payments, we're talking about one local regulation trying to marry up with a different local regulation. And so what we're trying to do is it becomes the sort of the historic correspondent banking, KYCC. Yeah. So we do deep due diligence, as you know, yes, on our clients at the onboarding stage. So we work really, really closely with our prospect fintechs, PSP providers, and so on, to see what their compliance regime looks like. And we bring our partners in internally. We've created a great governance network. It's a long process, but it makes the next step that much better, because then we can trust that you've looked at your clients, and that allows for the local wallets in multi-currencies, because you're not onboarding the individuals that are the clients of the fintechs. We're onboarding the fintech, and we're trusting, just like we onboard the foreign bank, we're trusting the KYC that they're doing. But I think there's still a lot of work to be done, and I think that the regulators need to come to the table to do the work as well, so that we can look to that future interoperability of local system to local system. Because it's, we can't have faster payments instead of compliance. It has to be both.
Absolutely, yeah.
But this is one of the key limiters to innovation, and I genuinely think it's one of the key reasons it's been really hard to invest in this space, because the amount of capital that you need to go out around the world. One of my portfolio companies called One Money is a US dollar denominated stablecoin and network. They have 40 MTLs around the world. What startup can go and do that? And they're very fortunate to be like an extremely regulatorily focused, experienced team. But there's very few new startups that can manage this global network of regulations that like don't speak to each other, that require like quite a bit of capital up front in order to comply and get all of the required licenses. And I think we will see some large fintechs become banks in order to not circumvent, but in order to speed up the process of needing to work through the network of incumbent banks today, which is a huge limiter to their speed, to their ability to move, who at any point can say, you know what, we're done with this particular partnership. And so to stop reliance, I think we're gonna see to reduce reliance on other entities, I think we're gonna see a lot of scaled fintechs in this space look to become banks.
And they already are in the UK and across Europe. They've got their banking licenses, they're members of SWIFT.
Yep. It's true.
Yeah.
And I think the US market is the next market. With the new administration, we're gonna see a lot more openness, I think, to de novo charters, which there are already some applications that I think will be pretty interesting that will be surfaced in the next 12 months.
So Hamid, that's a reconfirmation of your idea that you need to start a bank at some point. So that's a conversation for another time, I guess, yeah. Let's talk about innovation, right? So I mean, we all talk about innovation being, creating something completely new out of whack, but the fact is sometimes there's as in MasterCard we call it, the small I and the big I innovation. So there's clearly some areas that can be dealt with smaller pieces, but on the other hand, you have things like global interoperability of real-time payment system. That's something, at some point, I guess there are people already doing it today, with EBA, SWIFT, and some of the other things with TCH that we've seen recently. But some thoughts on, how does, maybe, we start with you, Stephanie, in this case, is when you look at investments, in these early stage startups, what are some of the key attributes that you look at when it comes to investments that are driven by innovation as against just investing into a running business? So what are some of the key drivers that you see, or the key variables that you think makes it attractive for you?
At this point, I want to see companies that are going to be looking to not just create incremental change, but completely disintermediate the existing networks. And I think that's going to be possible soon. So a couple of themes that I'm really excited about is a completely global and borderless bank in which I can have any currency stored at any point in time and move seamlessly between any of these currencies with very low costs. Like I'm talking not the 1% to 3% that banks charge in Canada or the 5 to 10% total net cost. I'm talking like bips on a transaction. And I think we're pretty close to being able to have and there's a couple of companies that are doing this already. I could be Egyptian, again, and open a Canadian dollar bank account or a US dollar bank account and be able to move money seamlessly between my accounts. So I'm looking for a complete disintermediation of existing payment rails because I believe that it's possible with the technology that we have today. I think how do we get that to scale is a whole other question. I do think there are also really interesting opportunities on the B2B side that are both creating a brand new network, but are also embedded using existing, like allowing existing players to tap into a new network. So there's like really interesting embedded plays as well. But I'm looking for like a real, not just incremental innovation at this point, because we have enough of that, I feel, but something that's really going to create an alternative reality where I can have instant money movement very cheaply. And I think we're pretty close.
Makes sense. I mean, we've all heard about faster, better, and cheaper. I mean, that's been the mantra for the last 25 years. But Hamid, obviously, I've taken a look at yours based on some of the work that we've done with you in terms of the tech stack and some of the things that you mentioned about virtual currencies, holding distributed ledgers and, rather segregated ledgers. where you can actually hold balances. But tell us more about, how are you thinking about innovation in this space? And Rochelle, we will get to you because I know you guys are doing a lot on innovation as well.
That's great. Yeah, you mentioned that. We look at it from the accessibility, and as an infrastructure player, we see where we can have significant impact for our customers, which are large software applications with a specialized focus in different areas of their business. And when it comes to cross-border payments, there is a component of how you can optimize the cost and the fees by making the right decisions at the right time. But even before that, you mentioned about the ledger system. One of the areas that we see significant market opportunity is how large organizations have challenge with their treasury management, with how these organizations are in different jurisdictions. They have different bank accounts, different currencies, and they might have 20 bank accounts for 20 functions within their operation. And that has that creates a significant amount of friction for their finance operation. And what we did, we really focused on how we can digitize that experience rather than having accounts in different currencies, different countries, physical money sitting there and have to move across the border. How we can have that centralized through partnership with organizations that can offer the banking infrastructure in that scale, and we just give them that access through a unified experience where the money doesn't need to move. If you are a Canadian organization, have operation in the US, and your receivables are maybe in Canada in US dollar, you don't really need to move the money across the border for every single transaction. So we have created this cloud treasury solution that literally can live in any jurisdictions and deliver the funds through local rails. And that gets me to my other point. We know stable coins are making lots of waves, and where we see as an opportunity, other than the treasury aspect of it, where how it can streamline the money movement, is the last mile delivery and utilization. And that's kind of one barrier, because when you receive a stable coin, you still either need to convert it to a local currency or have ability to utilize that to purchase services or goods. And how we can bridge that gap, I think that would be a significant opportunity in the market.
Amazing. And Rochelle, you're Scotiabank, but not just in Toronto. In Canada, but you're across, the entire LAC and a couple of other markets as well. So, again, when you look at innovation, how do you kind of consider that? Because you've got different variables, different factors that might impact different, your business in various jurisdictions. So how does Scotiabank look at innovation, especially when it comes to money movement? Is it driven by, let's say, your decisions in Canada, or does each market have that? And how do you sort of align all of that together, given that there's limited dollars in how you invest in innovation?
Absolutely. I think JF mentioned at the opening plenary that it's important to balance, the innovation that's going to keep the bank running, and then the innovation that's going to help us leap forward. And so, on the keep the bank running, there's core system replacement, there's a multitude of, lockstep improvements in our existing systems. One of the elements that aligns with the strategy that our CEO launched a couple of years ago is that we are one bank across the markets that we operate in, and we're going to invest across the markets that we're going to operate in, and we're going to leverage innovation within different markets to see how we can apply that into a different market, whether it's our home market in Canada, whether it's something that our amazing teams in Chile invented not invented, but developed and came up with and deployed. How do we leverage that in Mexico? How do we leverage that in Canada? So we've got API stacks in Canada, API stacks in Chile, but we want to make it easy for our clients to do business. So how do we integrate those API stacks? It's one thing to create one set of API stacks, but actually in the interim we can create a layer in between, like over top, so it feels as though it's one experience. So those are some ways that we're looking to innovate. We also, I know there's a question later on partnership, so I don't want to go too deep into that, but also, looking at partners. Several of the panels have talked about it. It's not just about what can we build ourselves, because we are a large bank operating across multi-jurisdictions where the investment budgets are well managed. So is there a way that we can partner to solve that pain point for a client? And how do we bring that into, not just solving that one client's problems, but multi-client's problems. So we ensure that we're doing a nice balance between people who are, transforming the bottom layer or transforming how our systems operate, and looking for advancement and ensuring that we're creating an ecosystem that can be nimble, that can adapt and bring in the new optionality without having to change out a whole other core system, because that's very, very, very difficult.
Makes sense. And I think maybe that's a good segue into the point around partnerships, because I think, and Hamid, you've heard me say this before, as a wise guy said, partnership is actually the new innovation, going forth in these coming ages. So I'd love to hear, each one of your perspective on, and again, I get it. It's not easy to partner as well. At the end of the day, each one has a vested interest in the ecosystem. But the fact is, you kind of need each other now in this, going forth. So just wanted to hear your thoughts about it. And maybe we start with you, Rachel, this time, because, traditionally, banks in Canada, and having been an ex-banker myself, the general idea is that, at least it was that, banks tend to be, fintech averse, but we see that changing right now, because literally every bank in Canada is well partnered with some part of the ecosystem at least. So just from Scotiabank's perspective or your perspective, how important are partnerships for you, and then is there a strategy as to how you go forward with that?
They're absolutely key, and one of the elements that we look for, and I've mentioned it already, is that we're looking to solve clients' problems. So we don't see someone out there and we think, well, let's partner with them. We look at the clients, we speak to our clients, we have clients advisory boards from retail through to business banking and then up into the multinationals. Mm-hmm. And we look what's happening in the market as well. We look for innovations and we try to marry those two things up. We look to what's happening in the Canadian ecosystem and the other markets that we're operating in. To see where banking is going. So real-time rail, we're super excited that that's coming. We're really excited that that's bringing the concept of open access. The idea that, with being able to register as an MSB with FinTrack, you can now register as a PSP with Bank of Canada. Competition breeds innovation, and so we're trying to create an ecosystem where we're encouraging not just ensuring that there is open access, but then ensuring that the fintechs that are out there and that the MasterCards or that we're finding those complements to what we're offering our clients, because we can't be everything to everyone everywhere. We can't invest in everything, and so with open access, open banking. So we're partnering with Flinks. So not only are they a client of ours, for example, but we're partnering with them and bringing them to client dialogue and ensuring that we're seeing what can open banking bring, like what is the future, and how do we ensure that that's creating a more seamless ecosystem that is addressing the pain points that we talked about. Speed, access, what's the word I'm looking for? Anyway. Also looking at our corporate clients, how do we simplify integration? So we partner with, with SAP and others to ensure that as we're onboarding a client, we help to simplify that integration point. So that's where we've got partners there. So we see them in multiple ways, and I'm sure that there are partnerships within Scotiabank's ecosystem that I'm not even privy to or have line of sight into, but definitely something that we embrace with open arms.
Makes sense. Stephanie, from your perspective, obviously, when you make these investments in fintechs, you probably look at where are they partnering as well, right? Because at the end of the day, a fintech on its own, while as big or small as they may be, do need partners to kind of to grow, or at least to hit the right segment that they want to approach. So you see a change in the trend in terms of how they're looking at their approach of partnership?
I think if I'm going to narrow specifically to partnerships within the cross-border payment space, the clear one is to solve the last mile issue. So even if you have a stable coin, today nobody really accepts stable coins from a payment perspective. So that's, I guess, one solve is you could partner with existing payment acceptance or payment processing companies. And I think the second, which has been the most common, is the payout rails all require a banking partnership, going back to the point that we were making earlier, which is those are really, really hard to get now if you're doing anything stablecoin. The US market has changed a lot. I've got a portfolio company called Conduit that literally does cross-border embedded payments via stablecoins, and they have 0 banks in Canada that will allow them to use their custody, to use their cross-border desk to swap from even just USD to CAD or CAD to USD. We're not talking anything to do with stablecoins. But because they have stablecoins in their mandate somewhere, they're not able to get a bank account, period. They have 5 partner banks in the US, and again, that's changed a lot in the last 12 months with the Genius Act. So if you guys work for a bank and you want to get into this space, please come find me later. The last mile is the biggest issue right now. If you are in, again, there are some jurisdictions where you can get your own license, and so you don't need to work through a custodian bank, but that's generally not the case, and it has been a big inhibitor of innovation in this space.
That's great.
Your thoughts on this?
Yep, I want to just refer to my previous life when I was doing my telco ventures, and that's where I learned about the value of partnerships and how we looked at how I see the trend with how banks are following the same kind of path, where in the past when telcos hearing about Viber or WhatsApp, their whole thing was how we can shut it down because it's taking revenue from us for voice or text messages, and suddenly they realize the value of how data moves and how it can generate endless revenue opportunity. And now we are at the point that the collaboration is even with the streaming companies that Netflix of the world pay kickback to telcos when you watch a TV using their internet because they increase the usage. And that's where I see with the banks how that collaboration kind of began about 10 years ago. And it takes time for some of these relationships take time to mature up. The banks, we understand our banking partners have lots of regulatory burden and commitments, which we don't have, and we want to avoid that. And in order to avoid that, we need to kind of build that trust and transparency and how we are going to be the gatekeeper for their organization to prevent losses or damages, and that way we can become an enablement platform. So we see significant improvement and partnerships and collaborations between banks and fintechs, and that is kind of driving that faster innovation. Because fintechs are nimble and they're moving fast, we have less operational burdens and bureaucracy, but we still need to align ourselves with how our banking partners operate in different jurisdictions and how we can be that middleware to enable other organizations to have access to the banking networks.
That makes sense, yeah. In fact, Hamid, if you recall the last panel discussion that we were on in New York, I mean, literally we had 6 people on stage. We were all competing, but we were also partners. So that's how important partnerships are. We're probably going to be running out of time soon, but I just want to spend a few minutes on obviously the next big thing, which we all talk about is stable coins. So let's spend a couple of minutes on how the world has evolved, right? 50 years ago, it was just wire payments, and then you had the likes of Western Union and MoneyGram coming on. Then you had, obviously the digital players like the Remitly's and the Wises of the world. You had MasterCard, and our other friends, the other network as well. We've got things like MasterCard cross-border services and Visa Direct and other products that are out there. Then you had the emergence of things like Ripple and Hyperledger, which was using blockchain to move money across with the promise of solving problems, but again, people were trying to identify what the problem was with the solution being there. And now you have things like, the Circle and others that are actually trying to leverage stablecoin and really enable the ecosystem to move on that. Similarly, you also have many real-time payment systems that are looking at being globally interoperable right now. So the fact is, if we focus on things like speed, let's face it, at some point, when you have real-time schemes that are going to be globally interoperable, money is going to get there real-time. And in many cases, it'll also get there with real-time data because most real-time payment systems are actually ISO 20022 enabled, and you'd know that very well as a banker as well, right? So just focusing on that aspect may not, but on the other hand, stable coins clearly has some value in case of, especially when you're sending to markets where the currency is not all that stable, which is why the whole stable coins thing comes into play. And so you would see some value on that. But again, like I said, there are different problems in different parts of the ecosystem, different concerns that different jurisdictions may have. For instance, sending money to Mexico and the recipient may have a different challenge as compared to what you're sending money to, let's say, between UK and Canada might be, where the currency is a lot more stable. So given that there is a lot of interest in this, especially with the Genius Act coming into force, I have to do this. I mean, I would really want to understand your perspectives on how are each of you thinking of, I think Steph's made it very clear as to how focused she's on stable coins, or at least as looking at that as an investment vehicle. But for all of you, in terms of how your respective organizations are looking at stable coins, or let's just talk maybe beyond stable coins, even digital assets, how are your organizations looking at that and playing a role in that?
We're doing our research. We're talking to some of the names that you mentioned as well, to see what. Again, it's the problem that we're trying to solve. So as a financial institution, is there a way that we can apply it for ourselves, to the benefit eventually of our clients? But really, I would say for Scotia, we're in the exploratory phase. We're doing our research. We're definitely not ignoring it, though. We know that there are absolute benefits to being able to leverage this and embed the concept within how we operate. Some of the initial sort of brainstorming might be around, and I'd mentioned this earlier, like how do we make our treasury more effective and efficient? We're operating across multiple jurisdictions, and in jurisdictions that we're not even in, but that we've got banking partners in. Correct. So how do we use that to sort of optimize our liquidity potentially? There are multiple use cases in that respect. The concept of real-time rail and ensuring that we can not just optimize in the operating hours, but how do we optimize 24/7 across those jurisdictions? We're in the exploratory phase.
Got it. Makes sense. Yeah. Steph?
Maybe I'll call out one other use case that I haven't talked about, which is micropayments, which is small payments to creators or like royalty payments via Spotify. I feel like that's a pretty obvious use case too, and a big pain point that has not been solved. So why are we batching our payments every 2 weeks or once a month? Because the infrastructure is too costly to allow for instant payouts any time. And so that's an area of innovation. And then another area that I think is interesting around this space is the ability to have agentic payment frameworks. So if you think about cross-border payments around the world, at some point, you're going to have an agent doing the paying for you and or accepting the payments for you. And so that's another area of innovation that we're excited about. And then for some of the folks here, I think one big opportunity is being able to enable from your bank account today, be it Scotia or whomever else, the ability just to hold a stablecoin, which you can't really do today as a balance. You can only hold fiat. And so the ability to do that, we have another portfolio company that's completely regulated in the UK that's working on that, and I think called Palisade, and they've got good traction as another vector of innovation.
That's great. You just took my last idea about the AI, so I'm going to think of something else. But I agree with the agentive pays. It's the future for efficiency. Businesses or consumer, that's kind of a last mile innovation where how we can give them flexibility when they set up parameters and say, here is my deadline, here is my ideal buy rate, here is how much I want to buy, and here is how much I want to hold in different currencies, then the system can make the best decisions for them. And that can help businesses with large value of exchanges. Every cent matters with how much it impacts them on annual basis. But one last mile on the coins, I think one area that we see that there are thousands of these coins, stable coins, are created in different countries. So they are like currencies within currencies. And what could be the future correspondent bank for these, or correspondent coin, whatever that is the right term, where can facilitate the exchange between all of these coins into the domestic coin, where the recipients on the other end, that can increase the utilization. So that's where we see a future opportunity where someone sees just manage the exchange of these different stable coins that operating in different countries and regions.
I would say on the agentic AI as well, we're talking with some clients, and I've got the benefit of my clients also having clients, is how can we work together to use agentic AI for risk management purposes, yes. So fraud detection, those sort of elements. So that's an area that we're only just starting to look at, but it could have huge benefits to really ensuring that we're creating a safer space for our collective client base.
Amazing. I'd love to talk to all of you about what MasterCard is doing in that space when it comes to cross-border money movement, because at the end of the day, we offer a sort of multi-rail platform, whether it's bank accounts, wallets, cards, stablecoin, base settlement, etc. But I think we're going to be out of time in another 3 seconds, so probably cannot take any questions today. But hopefully this was an informative session. A huge thank you to the panelists for taking your time to be with us here today.
Thank you.